Welcome back. It is time now for business. Matthew's with me. Matthew, tell us a little bit about this iPad mania.
Yes, so here in Paris, we're just 10 minutes away from the iPad going on sale. It's been going on sale at 8 o'clock around the world. 10 countries today it will launch. It started over in Australia. We can see some people there queuing up, waiting for the launch. In fact, we can hear from two customers actually explaining why they wanted to queue up all night to get their iPad.
If you're gonna get it, you might as well.
Yeah.
I'd rather be here than like at the back, so.
Yeah, that's right.
So
No, we don't want to risk it selling out, so that's why we came earlier.
yeah.
Well, let's hope they got their iPads. We also could see a bit later in Japan similar scenes, and one customer there as well explaining what he was after.
Apple keeps on releasing really great products, so I want to get the newest one, the latest model.
So Apple is expected to sell around 65 million iPads this year, and their share price just continues to rise. Yesterday, we saw it getting close to even the $600 mark. There we can see it, how it's been rising through the latter part of this year.
Doing very well there. What about the rest of the stock markets, Matthew?
Yes, quick look at the stock markets then. Let's take a look at Asia. Nikkei's closed for the day. Other markets are still open. They've been moving around quite a lot today, but there we can see a mixed picture up in Shanghai and in Japan.
Also, yesterday, a new record on the US stock markets.
Yes, that's right. As Melissa said, there was a record on the S&P 500 yesterday. It broke through the 1400 barrier. First time it's done that since June 2008.
Now, tell us a little bit about Greece, the very latest there. It seems that it's close to getting its hands on that crucial second bailout.
Yes, that's right. It's getting closer and closer. The Eurozone governments and parliaments were ratifying the deal for this €130 billion bailout this week. It was the turn of the IMF yesterday to approve their portion of that, a €28 billion portion of the bailout. And we can hear a bit more from this report from Kyle Brown.
Good morning, everyone.
Among the many meetings with the IMF, Thursday's conference was highly anticipated.
This morning, the IMF's executive board approved continued support for Greece's ambitious economic program.
After months of negotiations, the IMF has approved €28 billion in funding for Greece over the next 4 years. It's the second bailout for a country whose economy has been in free fall and whose borrowing rates have risen to alarming levels. The IMF expects Greece to emerge from its recession in 2013, but with no anticipated growth. Europe's most indebted country has put previous loans to good use, but the country's banks have been slow to pump money into the economy.
Mistakes were made, things were omitted, and yes, things could have been different. But after a certain point, I believe we found the right strategy, and this strategy bore fruit and will bear fruit.
IMF and European officials will be keeping up the pressure on Athens to ensure the government implements its vast fiscal reform programs. Tax evasion has been a major drain on the Greek economy, but that is changing.
In the collection of tax arrears, a target had been set initially of €400 million, and at the end of 2011, this was greatly overachieved with €946 million.
The rescue funds are expected this summer, but if the Greek government fails to implement the agreed reforms, the loan package could be at risk.
We're going to have a look now at some of the rest of the day's business stories. Sovereign wealth fund Qatar Holding has continued its shopping spree here in France. The fund has taken a stake of more than 1% in French group LVMH, the luxury goods company which owns brands like Louis Vuitton, Moët & Chandon and Marc Jacobs. Qatar has also snapped up shares in group Total and media company Lagardère, as well as French football team Paris Saint-Germain.
Ireland is hoping to change the terms of a loan from its central bank. The €31 billion loan was used to prop up the country's banks. Ireland says a deal is vital to its recovery from the debt crisis and is hoping to defer a repayment due on March the 31st.
China is showing its anger over the proposed European carbon tax. The country has cancelled an order for 10 Airbus jets. This is in addition to an order for 45 jets cancelled earlier this week. China, India and the United States are protesting against costs airlines will have to pay under the EU's emissions trading scheme. Now, yesterday saw Libya take another step towards a functioning economy. The stock market has just reopened for the first time since the fall of former dictator Muammar Gaddafi. Luke Shrego has the story.
More than 12 months after a civil war forced operations to cease, Libya's stock exchange is trading again as business inches back to normal.
Honestly, we are optimistic that the business wheel is moving again in all aspects, including with the exchange market.
10 companies listed with a value of $3.1 billion. Many shares traded involved the finance sector and banking. However, in a nation where much reconstruction remains after months of bitter conflict, a cement company made the grade too. Under former leader Muammar Gaddafi, foreign interest remained weak, with investors put off by red tape. That's something business leaders here want to change.
We're about to set up preparations with the central bank and the Ministry of the Treasury, because Libyan law does not forbid foreign investors from buying and exchanging in the stock market.
The first day's action saw little movement in the market, with shares in a Libyan bank traded to the tune of just under $10,000. But that's not putting off managers. They want to turn Libya into North Africa's premier financial hub.
Now, Matthew, we're going to hear about a strike in Italy that might not upset everybody, or
Yes.
even anybody.
Well, transport strikes are, really make life difficult for people. But this group, perhaps not so much. These are lawyers who've gone on strike. I was actually looking up lawyer jokes before we came on air, but I couldn't find an appropriate one. But we can see a whole load of lawyers there who've been on strike all week in Italy, actually. They're protesting about an austerity package that will reform the way they can charge legal costs. And they're also complaining about increased competition. We can hear from the president of the Lawyers' Unitary Organisation.
Lawyers are going through difficult times. Out of $230,000, more than 100,000 are suffering. We have insecure jobs and are underpaid.
So he called them wild liberalisation changes because they say that these changes, which are all part of Mario Monti's measures to get the Italian economy moving, they're saying that they'll in fact increase legal costs, undermine the protection of the weak, reduce expertise. So not good news at all. But meanwhile, the courts in Italy have been very quiet all week, and people have slightly less legal bills to pay at least.
A world without lawyers, or a country without lawyers at least for a while. So it sounds like an extraordinary thing. Thank you very much indeed, Matthew. Look at the very latest business headlines there is just coming out to 8 a.m. here in Paris. In just a moment, the very latest headlines. Do stay with us.